I have been doing a lot of buying in the stock market over the past year or so. There have been some really good bargains, especially as all the tech stocks outperform. A lot of the stocks that I follow have not. And I think there is a lot of value to be found in the market. And one thing I've been noticing is that some companies seem to agree with me. They've been buying back their stock kind of very aggressively. And there's four in particular that I have in my own portfolio. Either I've added to them or I've owned them for a while. Their management teams seem to think that the stocks are very, very cheap right now. We'll dive into exactly what those four are in just a second. Before we do, check out the link you see on your screen, fool.com/Frankel. Get a message from my sponsor, The Motley Fool. It's the best way to support this work I'm doing on YouTube. Again, fool.com/Frankel. So let's get right into it. So I'm going to share my screen. Okay, so a lot of companies in the stock market buy back their shares regularly. A lot of them do, but not all do it for the right reasons. So a lot of companies buy back shares just because it's a kind of financial engineering method to increase earnings per share over time. If you can buy back, 10% of your shares and you still make the same amount of money, then your earnings per share will be 10% higher. So things like that are, not necessarily bad uses of capital if companies have excess capital, but they're not the right reason to do stock buybacks. The real reason is if a business is trading for significantly less than it's really worth, buybacks can be a very efficient use of capital. So if someone offered you the ability to buy a $100 bill for $80, you would do that as much as you could. And that's kind of the idea with stock buybacks if your stock is trading cheaply. So obviously, it's really tough to say what the true value of a business is. If I know some very, very smart and experienced stock analysts. If I were to pick a stock, say Berkshire Hathaway, and I asked 10 people what the company's intrinsic value is, I would get 10 different answers, and they'd probably be pretty different from one another. It's really tough to say what a business is really worth, but when management is unusually aggressive with stock buybacks, it can be really worth a closer look. So here are four stocks that I have in my own portfolio that have massive buybacks going on right now, and you might be surprised at the magnitude of some of these. So number one is General Motors. They've made headlines with their buybacks, so this is the one that you're most likely to be familiar with, if any of these four. So GM has bought back a staggering 18% of its shares in the past year alone. Their management implemented a $10 billion buyback program that kind of shocked investors at the time and said it was going to be an accelerated one, and they've already finished it, so it really was accelerated. Their outstanding share count has gone down by 18% in the past year, and they just announced a new $6 billion authorization. That represents about another, little more than 10% of the remaining outstanding shares at the current price. So this is a pretty aggressive buyback, and GM can afford to do this. They made about $11 billion in net profit in the past 12 months alone. They're expected to do a post similar earnings in the next 4 quarters. And they trade very, very cheaply. So it's not hard to see why management might think this is a great value right now. They trade for about 5 times forward earnings. Now, the auto industry is not a high multiple one. Even if things are going really, really well at General Motors, this is never going to be a 25 to 30 times earnings stock. It's usually going to trade for less than the average S&P company. But that's a remarkably cheap valuation, especially when you consider things like their EV potential and their autonomous vehicle potential and all the things that they're doing right now. Number two is the newest stock I bought in my portfolio. This is JD.com. They are a China-based e-commerce company, and I don't really want to get into the details of the dynamics of the business right now. But revenue's been pretty flat. Revenue was up about 1% year over year, but management is focusing on efficiency. It is producing results. Free cash flow, for example, went up by 11% year over year, which with 1% revenue growth is pretty impressive. They bought back a little more than 7% of their stock in the first half of the year alone. So that's roughly a 14% annualized buyback rate. Pretty aggressive. They exhausted their authorization pretty quickly. They just made a new, bigger $5 billion buyback authorization. And remember, this is a roughly $40 billion market cap business. So that represents a lot, roughly 12% of its outstanding shares right now. And not only does are they buying back stock aggressively, this also has a 3% dividend yield. So good income stock as well. Really interesting play. There are some risks to investing in Chinese companies, so I opened a pretty small position. So keep that in mind if you take a closer look. Number 3 is PayPal. PayPal is a highly profitable business. They have over 400 million users between PayPal and Venmo. The company is generating over $5 billion in annualized free cash flow. It's using all of it to pay for buybacks. PayPal has a lot of cash on its balance sheet, so it can afford to do this, to pretty much do what it wants with its free cash flow. And it is choosing to use all of it, every penny it makes from from its business, on buybacks. The stock trades for about 14 times earnings, despite it's got a double-digit revenue and earnings growth rate right now. The share count is down by 12.5% or so since the start of 2022. The company, like most tech companies, does have some stock-based compensation that offsets a lot of its buyback efforts. But that's still a pretty impressive reduction for a kind of fintech company with a lot of potential and a lot of profits and a very low price to earnings multiple. So PayPal's one I've been building for a while now. And next one is probably the least well-known stock on this list is Nextdoor. This was a SPAC IPO in 2021. A lot of people ignore anything that went public that way, and I can't really blame them. This one's a little different. It's by far the smallest company on this list. It has about an $875 million market cap, has over $450 million of cash on its balance sheet, so the market's not really valuing this too high. It has no debt at all. It is buying back stock pretty aggressively, and that's very recent. Their CEO resigned, whatever you want to call it, and the founder of the business recently took over and is really focusing on efficiency, focusing on capital deployment, and really just kind of building profitability. All of the profitability and growth metrics are moving in the right direction. The company bought back 4.5% of its outstanding shares after accounting for stock-based compensation in the second quarter alone. Pretty aggressive pace. It still has $119 million left on its current buyback authorization. Excuse me, that represents about 13-14% of its current market cap, so a lot of potential to continue this aggressive pace. And I'm going to do a separate video on Nextdoor. I'm liking this business so much right now. Like I said, all the metrics are moving in the right direction. New leadership is really prioritizing profitability and is getting there. They're expecting to be free cash flow positive in the fourth quarter of this year, which is a lot sooner than even I thought. And I've been a big fan of this company for a while. So I'd love to hear what you think about any of these four. Leave me any comments you might have. I'll do my best to answer any of them individually. And let me know if there's one that I missed, a company that you know that has a really aggressive buyback. I look forward to hearing about it. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from the popular product Stock Advisor. Stock Advisor has beaten the market by nearly 5 times. So go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 767% as of July 5th, 2024, and are measured against the S&P 500 returns of 163% as of July 5th, 2024.